Let's find out what pro trader Alan Knuckman is up to. He's a chief market strategist for St. Paul Research. And Alan, what a way to come back from the Thanksgiving holiday. The market has been going wild.
Hello, Angie. What a welcome back week it is. We've got stocks super strong, still up near 25% in 2021.
What's happening with your trades? Are you sticking with your trading strategy?
All right, let's talk about our current plays. We did a lot of selling, profit taking in November, which is always a great idea. Sell into strength. Now, the greatest asset you can have, or the greatest gift for a trader, is time. We've got plenty of time in our options. Actually, no December plays. If you look out, we've got January options in DuPont, a second half play there. We already took profits on half. We've got American Airlines and NEO. Then looking out further, we've got March, we've got FXI, the China ETF. And then going all the way to April, Halliburton and UNG, and then June for AT&T. So time is on our side with these overall big picture macro moves.
Tell us about your trade of the week, because you are looking for some sun to shine on your latest play.
All right, today's trade trigger is in Canadian Solar. Now, this is a stock that suffered. It's down 25% year to date, and it's actually 40% off its January top. Now, if you look at it technically, it's got a double bottom and, more importantly, bullish divergence, meaning it made new lows, but not new highs in volatility on this latest dip, which is a very positive sign that the short sellers can be out of energy at these levels. Looking at the trade, it's been between 30 and 50 since February. So we're right here at that 40 midpoint. A move above this 40 gives us a drive to that top of the range near 50, and a breakout of 50 sends it to 70, which is not that far-fetched considering we were at 65 back in February. So the play here is an April option, 4.5 months of time. The April 35 call is what we're looking at. The April 35 call, 4 months of time, and it's not that much more expensive than buying the January, February options. But again, in this environment, we want to have time on our side.
Alan, what are your trading day takeaways as you're keeping tabs on the technical aspects of the stock market?
All right, let's talk trading takeaways. Trading takeaway number one. Test and reject. It's my favorite thing to see. When the markets take out a previous low and then bounce and rally. That's what we've seen here in the S&P. We took out on Tuesday, we took out Friday's low, and we've had a big comeback because the buyers saw bargains. Number two, pivot points. So then I can look at the charts technically. Number one, the VIX, everyone is very concerned on Friday, and we have a little bit of flight. So the VIX rallied. Overall, the VIX has been trading between 37 and 14 this year, so the midpoint on that's 25. We're 20% down from just last Friday's highs, so that's a very positive sign, staying below the 25 level. And also, for that pivot point, the S&P 4660 is the halfway point of this drop from the top. Every time in history that we've had a V recovery where it's rallied back the distance of that sell-off, we've seen new higher highs, and that targets 4,900 in the S&P. All right, number three, terrific twos. After all of this, the S&P and the NASDAQ are just 2% from their all-time forever records, rebounding right back, and as I like to say, another snapback attack.
Thank you, Alan, for your snappy trader talk.
Thank you.
Go to businessfirstam.com for where to see our show on TV.